All right, so here's lecture 17. ICT went over when there's a larger opening range gap. That invites larger volatility, but if there's a small opening range gap, that can be problematic for price. Might be a little bit fickle. But what I did Monday is I was actually looking at ES because I knew that NQ had already filled in its opening range gap. But if we looked at ES still had portions of that unfilled, and a little unchanged is less than 34 handles on the opening range gap. So just kind of like the new week opening gap, new day opening gap. And honestly, I probably won't go over too many of these notes. But yeah, this is Obsidian. I've been working on it. I think it's a lot better just because like I can have timestamps where I can go back into the videos and look at. Obviously, I had to do these myself, but if you go into like there's a plugin. I probably won't really talk too much about it. And then this like shows you overall notes. So this like connects stuff to it. I don't have too many notes, so there's not really much to connect. But I'm sure as this grows and as I have all these notes, I'll be able to connect things more, and it'll be able to be a lot better. Like here, I can just go in lunch macro. I can click on that, and I can see this exact lunch macro on that day. And then here we have this lunch macro. Now you go right there. And I can also see notes on lunch macro. So I just think it's going to be a lot more easier to organize all these notes because I'm trying to get these notes a little bit organized and underway. So let's just hop into the chart on this Monday. So we see we originally have what here? Relative equal highs, and the rest above here. So we drop down, we take these lows here, and then we come up, and then we take these highs. So right here, I don't think there's really too much. I'm not going to really dive down into like the 15-second charts. Actually, we might, but we're mainly just going to be looking at the 1 minute's small enough. The 1 minute's small enough to get that narrative, to get those small fluctuations of price. But I might drop down. Notice how we're failing to reach this new day opening gap right here, and we're forming an SMT above true day open. So this blue line right here is the true day opening price. We're manipulating above that. SMT shows smart money accumulation. We do have equal highs up here, but if we note that we are in a premium here, and if we look at ES is within a premium. So we form SMT. That's indicative of a smart money reversal. Smart money is accumulating that above true day open. We have SMT, and then we break lower. So we get break lower. This is the first presentation fair value gap. Notice how we have a fair value gap in, fair value gap out. This is all sufficiently balanced. So we don't really even need to trade up into that. And notice how this volume imbalance gets respected. We're failing to trade back up into this as inversion. We have this wick right here as also acting as resistance on price. And notice how volume imbalance opens up, gets traded to heaviness. Volume imbalance, heaviness. So price is very heavy here. I guess we will go into lower time frames. And as we see, price trades into that 15-minute BISI, which is right here that I'm noting right here. And then we have a macro that opens up. We get manipulation above that into a SIBI. Order block gets respected. Propulsion gets respected right there. And we have a stop on lower time from 2022 model. And then we see displacement to where this is the new week opening gap with the new day opening gap. That's that black hole. And then here we trade up in this order block, these two consecutive up close candles. This gets respected. And then we see displacement lower. See this low right here, intraday low. It wasn't really on, like normally I like to see a low get formed at like a new day opening gap, new week opening gap. It's a Monday. We didn't have any red folder news in this session, so we put a low right there. I don't know where ES is trading at. Let's peek at ES here. ES Monday right here. ES traded into a new day opening gap right there, and then we come back lower. We have. Wait, was this the 12 p.m. low? Let's see. No, it's 10:40. So yeah, we're trading within that new day opening gap. And then what do we come up? We come up. New week opening gap, new day opening gap. Notice how, look at this level, like so beautiful. And then we come lower, market structure shift, pull back, imbalance right there. Where's that 2022 model? Right there. We get a stop on here. Balance price range forms. Displacement 2022, right there. Looking for maybe lows right here, this imbalance right there, there could be some action there. Overall, there's nothing crazy there. And what opens right here, lunch macro, what's been profitable? What has been profitable? Shorts. So AM buy stops rest here, they also rest here. Notice how we don't need it, or I don't need it to trade up there, but we have AM buy stops that are trailed right there. And like, I don't know what to say other than just the price action in August has been like phenomenal, just very phenomenal, which is kind of crazy because ICT is in his previous mentorship or lectures in 2023. At least he was talking about how August is the worst month to trade. It's usually bad price action, but like honestly, this volatility, this action, like it's gorgeous. It's gorgeous. So all of these moves I think are pretty tradable, but it doesn't mean that you need to be trading every one of these moves, which is why I'm just gonna study here. So right here, sell side taken. What is this? Market structure shift. What do we have? AM buy stops the rest of the year. What are we within? Lunch macro. What time specifically does it start? 11:50. And notice how we trade up into that to be at 11:50. That's very nice. And then to 12:10, that's when we get our reversal. Notice how to key time and a key macro. Then we get displace, or we displace above new day opening gap. Look at that. Look at that. That's just, and it doesn't get better than that. Constant curve to that new day opening gap with fair value gap with these two down close candles that have dug into these two down close candles. Propulsion block right there. Boom, traded into right there. Also, yep, and then we see breakaway gap get formed. We trade back down, institutional order flow entry drill. Notice where this aligns with as well, left side of the curve. If we look at this up close candle right there, what is that offering as? Mitigation. And then we seek this new week opening gap, new day opening gap. That could be partials. And then we seek AM buy stops. Like this right here, like this fractal right here, amazing, amazing. This fractal right here, amazing. It was just beautiful price action. And then what do we see? We see buy side right here. What is this? Market structure shift. Breakaway gap forms. Then we have this sell side imbalance right here. We key off it here. We then reclaim it right there. And then what is this? Stop on right here. Buy side. Market structure shift. 2022 model. What time is this happening? 1:30 opens up. And then we seek lower prices. Right here. This gets traded into. We form an SMT with ES. ES actually takes us low. And look at this. Look. 2 p.m. 2:05 p.m. Exactly. We trade into a low of the day at a new day opening gap. Man, it literally does not get much better than this for like a PM session. Normally I like to look for AM session, but overall very nice AM session and PM session. Like this is just gorgeous. And ICT actually took a trade. He took silver bullet right here. What is this? We have SMT here showing smart money divergence. Smart money's distributing their short positions. They're covering their short positions right here. We have that SMT. We have now displaced a large range here. What do we have here? Market structure shift. Sell side taken 1, 2, 3, 4. And we have SMT here. So we count this as a sweep. Divergence right there. Now what is this? Violation of this high. Boom. Very nice right there. And we don't trade back with it. Or this is all happening within this breaker. We leave it. New day opening gap again gets reclaimed. Boom. And what are we looking for? Where's the nice little easy draw on liquidity? Well, we have this portion of this imbalance that's unfilled. We have this high right here that we actually do take. But mainly I would be looking for new day opening gap, new week opening gap. And notice how this is just a study, but notice how new day opening gap, this new week opening gap could just be a low threshold for where to target, but new day opening gap does get referred to in pretty much every one of these situations. Like there's not a situation where we just dig into new week opening gap and don't dig into this new day opening gap. So very nice new day opening gap. Then what is this? Buy side, buy side, buy side, buy side. Okay, so it's done the work there. It's not displacing higher at all. We've kind of delivered buy side already. We know that we're probably not looking for much, but still, what is here? Sell side liquidity rest right here. Also, what is this? That new day opening gap acting as a magnet. Look at how many times this is referred to. Very nice, very beautiful. And what do we have here? Buy side, buy side, buy side, buy side. New day opening gap high, and that new week opening gap we're still within. Market structure shift. Boom. Beautiful. We have an inversion right there. This acts as a balanced price range. We also have this inversion level. Remember, this is like lecture 2 within this mentorship. This inversion within the stop line is ideally what the algorithm is going to reach for. That's how this is getting respected. Constant curvature of this wick. Boom. And then here, within that 350 hour, or three not 350 hour, but 350 time, volatility injects. We trade within this inversion level right there. Notice how well it gets respected right there. Boom. And then now this is an inversion. And then we see the body low right here, and then this rejection block. We don't take the lows. There's not really much of value right there, but still a price fluctuation to look at. All right, let's drop down into the 15-second chart. First, let's look at this. We have buy side taken, shift to market, like 2022 models literally everywhere. Here's a market structure right there. Institutional order flow entry drill. What is this? This is almost a immediate rebalance, but we're using this wick. And boom, we're trading into that. Very nice. Let's go back to the AM. Overall, this day was very nice. It was a Monday with no red folder news, so off the bat, can't expect too much. But this profile looks pretty similar to the profile that we had today. If you're watching this after the fact, which is going to be uploaded after the fact. So notice how we have this BISI that gets. This is the first 15-second, or no, this one is. Right here, we have this imbalance. Trade up, we form SMT. So we're failing to even take this high. And notice how we're kind of just consolidating above these highs. This is priming us up for a possible reversal. SMT shows that. We then have this imbalance with that volume imbalance right there, that inversion level. Breakaway gap on the 15-second. Volume balance getting respected. Here we have this volume balance that actually doesn't get traded to. We have this level right here. We also have this wick right here. This is a 5-second imbalance that I'm highlighting that can't be seen on the 15-second chart. And then here we have we barely tap this level, like we barely reach up into that. Buy side liquidity also rests right there. It's also happening within that 950 macro. So what do we have here? Buy side taken, shift in market structure. This is a 5-second 2022 model. Accumulation. We drop lower, and then we have a stop hunt. What is this? Stop hunt, shift to market structure, fair value gap. SIBI right there. All this is happening within the macro. We've already had manipulation up here. We've had a balanced price range. So where does price not need to trade to currently? Well, we have balanced prices here. We delivered both buy side and sell side here. We've had both buy side, and then we have sell side. Don't mind that drawing. We have buy side and sell side, so we likely don't need to trade up there. We stop on here, shift to market structure, 2022 model right there. And notice here, this is a breakaway gap, which is actually going to be influential in the next video. But we have breakaway gap, big breakaway gap. So this is going to be a magnet on price, Here we have IOFED, trade lower, order block, that imbalance right there. What is this? Buy side taking, shift to market structure, fair value gap, 2022. And then we're trading back down to that low there. And then off this low, I really don't think there's anything. Like this type of trade is kind of a gamble in my opinion. I don't think there's anything of value there. There's not a clear draw, like straight down move, straight up move. I don't really expect to see that in the market. Here we have this new week opening gap. Boom. Constant encroachment. Respected. This sell side imbalance right there. Boom. Imbalance. Notice inversion level right there. Again, lecture 2. Breaker. Breaker gets reclaimed here with this imbalance. Breakaway gaps. IOFED. Right there. Buy side taken. Buy side taken. Shift market structure. And nothing too much of value here. Sell side taken. This is the silver bullet. Denoted in orange. That's that 1 minute imbalance. We're trading back down to that. Displacement. We're leaving this constant encroachment unfilled. And we see higher prices. That's all I'm really going to go over in terms of price action. Overall, what type of profile do we have? We had a 930 reversal, classic sell day, letting put in the high a day. This isn't convincing manipulation. Oh, bro, I forgot to, we never went, we didn't even go over Asia in session and stuff like that. I do want to go over that a little bit. Because I've been studying the 2020, I've been studying Asia and London sessions because I've just been trying to get better at my reading on price. So notice here at 6 a.m. What do we have here? We have a new. This is a new week opening gap. So this is Sunday. We then trade up. Boom. Dealing range is established from 6 to 7. So right now we are in a discount here. We have a new week opening gap that's above market price. We've just taken minor sell side. Algorithm is repricing higher to this new week opening gap. This new week opening gap is now going to act as a draw on liquidity within that 7 p.m. hour. 7 p.m. we draw higher. Imbalance right there. Like just order flow. Choose a market structure. Pull back. Imbalance. 2022 model. Boom. OTE right there. Volume imbalance. Notice how that's getting respected. And we trade up to these highs. We don't take this high. We generate equal highs. So very nice session right there. And I believe this green box right here is a higher time frame imbalance. All right, and then this is a London. London we trade into. What is it? The only bad thing about Notion is it's hard to. It's harder to zoom into pictures. So here we have new week opening gap. Stop out right here. Boom. This gets respected. And not really much of significance there. And then I don't have anything else of significance. So overall, very nice session. Very nice trade. Like this price, like beautiful algorithmic. Anytime I think that there's something bad in price, it's likely just because I'm reading it wrong, because I don't know what it's referring to. But it's always got to refer to something. So if you find out what it's referring to, no longer get frustrated by the fluctuations in price. Anyways, hopefully y'all have a good rest of your day. I'll see you on the next one. Peace out.